to Buy Now, Sell Now, right here on ET Now. I'm Karunya, and let's kickstart the show by taking a look at the top headlines of this hour. First up, Tata Motor Stock, which is nosediving in trade on back of some Brexit jitters. JLR UK is planning to halt output for a week. They will be shutting plants to shield the company against the Brexit worries. JLR post-Brexit shutdown will affect all the UK manufacturing sites. That's what the management of the company said. And they also said JLR needs more than 20 million parts daily on just-in-time basis. And uncertainty, however, continues to surround the China car market. Auto industry faces cyclical challenges. Worldwide, the car maker will change and shift patterns according to the needs. So while we have seen some improvement in the China market, there's nothing much that has happened clearly according to the management at this juncture. Piramal is another stock that's cracking in trade. ET says that SoftBank may shelve investment plans of $1 billion. And Piramal, in fact, SoftBank has also mandated a shift from wholesale to consumer credit. SoftBank wanted a 6 to 8 year exit plan. That's something that we're picking up from the Economic Times. Another stock also which is down in trade is Infratel on back of UBS's downgrade to neutral. They've given a target of 275 rupees. They see tenancy growth to be muted in the near term given the balance sheet constraints of telecom incumbents. 5G will be deployed gradually. They don't expect any immediate pickup in tower demand as well. Estimating about 4.5% revenue CAGR, 5.2% on an adjusted basis EBITDA CAGR over the next 3 years. Corporate tax cut would lead to higher adjusted PAT growth of nearly 11.5% CAGR over the next 3 years. That's the word coming in from UBS on Bharti Infratel. Let's move right on from some gloomy news onto some more trouble that's brewing for Lakshmi Vilas Bank. EOW files an FIR against LVB's directors. FIR is based on complaint by Religare Finvest for misappropriation of 4 deposits amounting nearly to 800 crore rupees. And also some negative news flow coming in with respect to the merger of LVB with Indiabulls Housing Finance, and this could be a bit of a setback for the bank as well because of poor CG of the bank, and the group RBI has not given the nod for merger with Indiabulls Housing. Let's talk about a big meeting that is going to happen today. FM will be meeting infra ministries on CAPEX, PSUs to expedite capital expenditure. PSUs will also release outstanding payments to contractor. They will also release outstanding payments. They will also seek faster rollout of projects post the corporate tax cuts. So this is an important meeting as well, which we are tracking. Let's see what will be the outcome of that. But for now, let's look at what's happening in the markets. Nifty once again is witnessing some amount of selling pressure today. It's sub 11,550 levels, trading with a loss of nearly 50 odd points. Sensex is down another 100 points, 0.3% in percentage terms, but the mid-cap and small-cap index are the ones which are worse off. Mid-cap is down 0.7%, small-cap is down also 0.5%. From the Nifty 50 index, top loser is Tata Motors. Like I said, JLR will be shutting the plant for a week, and that's something that's making the stock nosedive in trade. Vedanta is also down 4.6%. Z Entertainment once again resumes its downfall. It's down 4.3%. ONGC, Tata Steel, GAIL, Hindalco, all these names from the metals index are the one which are cracking big time in trade. Infratel on back of that UBS downgrade is losing about 2% odd. Coal India is down 2%. M&M, L&T, Britannia, JSW Steel. It's definitely all, out of the top 10 losers. It's definitely a day when it's the metal stocks which are weighing massively heavy on the market sentiment. But on the flip side, a handful of names are also surging or rather seeing some uptick in trade. Bajaj Finance, top gainer, 1.8% up. Cipla is up 1.5%. ITC once again is up 1.4%. Bajaj Finserv, another one from the Bajaj pack, is up nearly 1% in trade. RIL also looking tad bit okay, up nearly 0.8% in trade. Let's move right on and bring on board our guests, Kunal Bothra as well as Ashish Kapoor, who are joining us on the show to help our viewers and share their trading calls with us. Kunal, hi, morning. What are your top trading ideas for today?
Good morning, Karunya. I would go with a buy and a sell in the market, which now I think is getting a bit choppy, but it's not breaking some key support levels. So net, when you try and look at that aspect, you indicate, or the markets are trying to indicate that the indices are going to a bit of a consolidation. Now in that regards, one buy and one sell. The first one would be a sell on Piramal Enterprise. The stock down the back of some bit of news flow. But what it has done is also it's led to some sort of a breakdown on the short-term swing charts for the stock price below that 1760, 1755 level. So if the stock breaks below that level yet again, I believe Piramal Enterprise could be a short candidate. Targets of 1700 and the stop loss could be kept at 1805. The second would be about Indigo. Now, in a market which has been extremely volatile, choppy, this has been one stock which has done exceptionally well from three-digit numbers to almost touching 1800 plus levels at current levels. I believe Indigo could be ripe for another 60 to 70 rupees on the upside. So that's a buy. More of a positional play, targets of 1940 and stop loss to be kept at 1835.
What about you, Ashish? What are your long-term wealth creation picks?
Well, I believe the market has certainly turned around. The sentiment is improving, and what has really happened so far is the large caps have moved up very sharply. So I believe there's a huge opportunity now in quality mid caps, and the two ideas which I have are in the mid cap space. First idea is Balkrishna Industries. Here I have a target of 791. It is a very leading player in the off-highway tire market and has a 6% market share. It also has a global presence. It has a very strong OEM presence. And I think the valuations are very attractive and balance sheet is very strong. So I think this is one stock which can clearly be bought for by long-term investors. There is very limited downside risk and upside potential is very strong. The second idea is Galaxy Surfactants. This is a proxy to the FMCG segment. They supply nearly to all the global FMCG players. They have a very strong global presence. 2/3 of their revenue comes from outside India. Again, very strong balance sheet. They have been reducing their debt. They have been growing their business at over 15% year on year. And the return ratios are all very healthy, over 20%. So clearly a very good high margin business, and also revenue growth is very strong, very well diversified across different FMCG players. And to my mind, again, a very safe stock, and I have a target here of 1470, which is a significant upside from here.
All right, thanks for your wealth creation ideas as well. Back, you're still watching Buy Now, Sell Now right here on ET Now. Time to touch base with some of our viewers then to address their query. First up, we have a caller, Mr. KP Rao from Kenya. Mr. Rao, thank you so much for touching base with us. Tell us, what is your question?
I bought Lakshmi Vilas Bank 2000 shares at about 40.
Okay.
And I would like to know the long-term view and the merger with India Bulls. What is the prospect?
Okay.
At the same time, another one is Ruchi Soya.
Okay.
So
Should we address?
Taking over, what is?
Should we address them one by one? I think that will be better.
Okay.
Okay. So let's talk about LVB first. You invested into it at a 40 rupees price point. You bought 2,000 shares and want to know what is the long-term picture looking like given the backdrop of their, aim to merge with India Bulls Housing Finance. Ashish, I'll come to you first because let's understand what's going on in the company at a fundamental level. We know that there's some negative news flow which came in yesterday itself about an FIR being filed against LVB in Delhi. This is by Religare Invest. Over and above that, we also are learning about some more trouble coming in for LVB and IB Housing Finance merger, which has been the top priority on the mantle for the managements. Because of poor CG of the bank and the group, RBI has not given the nod. So tell us, how are you reading into this, and should Mr. Rao stay invested in LVB? 40 rupees was the buying price.
In my opinion, I think the investor should book out because, like rightly pointed out, there are too many controversies surrounding this, stock and also the impending merger with India Bulls Housing. Secondly, if you really look at it, I mean, this really is an old generation private sector bank. Very difficult to expect it to really start improving its performance because really the landscape has really changed a lot. And in my opinion, I think in this market going forward, very clear that only the quality names will give you returns. So if you really want an exposure in bank, I mean, you have to go with one of the better ones. I mean, you have to go with HDFC, Kotak, ICICI, Axis. And if you want a smaller bank idea, then I think Bandhan Bank in the same space could be a much better idea. Even IDFC First could be a better shot, if you're looking at a mid-cap banking idea. But clearly, I think Lakshmi Vilas Bank has a lot of controversies around it, has a poor asset quality, has not been performing well. The results have also been disappointing. Plus, this whole controversy surrounding it. I really think not all a good idea. The investor should book out here and move the money somewhere else.
All right. Kunal, let's also talk about LVB's chart pattern. The query has come in at a very opportune time. Today, the stock is tanking big time as well, 4.5-5% odd. Ever since the stock touched 97, 96 rupees level earlier this year around April, it has only eroded value for its shareholders. What is your sense going forward on this one?
Yes, Karuna, it looks extremely weak on the long-term charts, and a correction from 190 to now 36 rupees in a matter of, I think, 1.5 or 2 years. From 2017 mid is where the stock made that kind of a high. So I think from those levels, the correction has been very sharp. Yes, of late, the intensity of correction has increased, but the stock has been on a downtrend since the last 2 years. Now, when you generally see such kind of a price patterns for stock prices, these stocks, they don't lift off in a short span of time. They go into prolonged consolidation, multi-year sideways range, where many of the short-term as well as longer-term investors, they try and exit because of the underperformance the stock creates as compared to its peers. So I think that could be the scenario largely for stock like LVB. And I would also advise that the investor should probably try and look out to exit the stock even at current levels.
Right. Mr. Rao, I hope you've gotten some more clarity after our experts' advice on fundamentals and technicals, and hope you will be able to take the right call basis of that. Thank you so much for calling in. Let's move right on to our next caller as well. Okay, it's an email. Mr. Kamlesh Bhatt of Rajasthan has written to us. He's bought 210 shares of Polyplex at 476 rupees a piece and wants to understand what should he do with his investment in this counter at the moment. Ashish, Polyplex, can you help us understand what essentially are you making of this company's fundamentals?
Polyplex you quite like, and I think this is a good stock idea. The company is one of the largest manufacturers of PET films, which are used in various industries, including packaging, electricals, and imaging industry. So, and the company has been doing very well. The results have been very decent. The growth is good. Company has a global footprint. The return ratios are all encouraging. So I really think that it's available at a very decent value also, and I think to my mind the investor has done a good investment decision here, so should stay invested, and can, if he has more cash available, can use it to buy more also at the current price.
Okay, what about you, Kunal? Polyplex in the last 6 months definitely has only headed southwards, but going forward, do you see good prospects?
So I think it's going to be difficult, for the stock because it's trying to test back its major support level. Now, support levels technically, as well as for stocks, mid cap, large cap, etc., they tend to be more of a level where there's a lot of demand which comes back into the stock price, both in terms of valuations or in terms of prices as well. Now, for Polyplex, I think that support is closer to 420 mark on the longer term charts, and I believe the stock tries to test this level time and again, then eventually these kind of strong support levels, they're given. So I think the investor could be placed at a very precarious kind of a scenario, because if 420 gets breached on weekly or on monthly closing basis, then there could be a high chance that the stock may fall by another 10 to 15% lower from those levels at least. So I believe that the holdings which you have for Polyplex, you can hold on to it, but keep a stop loss strict at 420.
Okay, so little bit of a divergence there in our expert views, but yes, both of them are telling you to hold on to it. Thank you so much for writing in. Next up, another live caller joins us on the phone line, Miss Indumati from Bangalore. Hi Indumati, thank you so much for calling us. What's your query?
Hi, very good morning. I'm having 30 shares of Sterlite Technologies at an average price of 330, and its price has fallen almost half now. So I'd like to know the future of the stock.
Okay, Kunal, coming in on Sterlite Technologies, how do you see the stock shape up in terms of its price moves? And given that it's halved, should she be worried?
Well, of course, you should be worried. Then the first caveat over here is that Karnya, the stock was sideways for almost 1 year, 2017 end till 2018 mid somewhere. The stock remained in a range, and the moment it broke that key support of 270, you've seen the stock halving from those levels. So I think that's one important lesson for the investor, that you need to have stop losses even for the best of the stocks on long-term charts. Now, talking of purely on the short-term time scale, that this month has been a good recovery for Sterlite Tech from almost 100, 110 levels to now 160 plus. I think the stock has done fabulously well in this month so far, and I believe just on the back of this renewed momentum on Sterlite Tech, the way the volumes have shaped up this month, I believe there could be chance that you might see the stock coming back to levels of even 200 to 220 zone over the next 1 to 2 months. So purely on a short-term time scale, I would advise the investor to hold on. I think at 200 or 220 levels over the next 1 to 2 months, if you get the stock price, I think that is where you can relook at your decision whether you would want to hold on to it or want to book losses from Sterlite Tech.
All right. Ashish, you also have a hold call.
Yeah, I think the stock has corrected a lot, but I think that at the current value it appears quite attractive, so the investor should hold on. Business is doing very well, and they are a good. I think the future looks good because the global demand for fiber is still very strong. So to that extent, the main business is still very good. The only concern, of course, is competition coming from China. So their margins could become under pressure going ahead. Also, their diversification to services business could lead to some stress on the working capital management. Apart from that, I think the business is still pretty good, optical fiber business, and they are pretty well established in it. And the other thing is that, there was some concern. One of the reasons why the stock fell was because of concerns on the promoter pledging. But the management was quick enough to respond to it, and that has allayed the fears of the investors. So I think overall, from this level, the stock looks fairly good. So investors should stay put.
Okay, Indumati, both of them, Kunal as well as Ashish, tell you to stay put. Hope you'll be able to take the right call. Thank you for calling us. Next up, another caller joining us on the phone line, Mr. PC Das of Bhubaneswar. Mr. Das, hi and welcome on the show. What's the question?
Thank you. I hold 200 Visakha Industries.
Okay.
At the rate of 274.
Okay.
Should I hold it or book profit at this rate?
Okay, firstly, you've made a decent amount of profit on this investment, so congratulations on that. Kunal, Visakha Industries has seen a decent uptick from its August lows. It's now almost at 325 levels. What would be your advice to our caller?
You can hold on to your investments on Visakha Industries. I believe that there could be a very strong case that the stock may come back to levels of 375, 380 as well. Now, the reason for that is that look at the last 3 days or 4 days of price pattern from Friday till Monday, approximately, when the stock saw a huge spurt in terms of volumes and prices. It generally indicates that fresh buyers or the ones who are waiting to buy the stock on the back of some sort of news flow, they came back into the stock prices. And then the last 3 days, you've seen some sort of tapering off into the prices. But that has happened on very low volumes as compared to the rises. So that itself is a very strong indication that a trend is likely to change for the stock price. Now, if you're a short-term investor, then I believe generally in such cases, the first average, which is the 200-day moving average, gets tested, and that's the first level of strong resistance or a target which the stock goes through. That level comes to 370, 375. So I sense you should hold on to your investments on Visakha. At 375 is where you should look out to maybe book part profits or full.
Ashish, do you agree?
I agree. I think this is fundamentally a very good stock. And despite the run-up, I think the future looks very promising. I mean, the whole industry itself is doing very well. And the cement roofing business itself is showing a lot of traction. Also, it's the second largest player in the industry. Enjoys very good operating and financial ratios compared to its peers. The overall growth of the company has also been better than the industry, and I think the company has a very strong balance sheet, and I really think that there is no concern here. The industry is growing at a very good pace. The company is doing better than the peers, and then the balance sheet and other strength is there with the company. So I think the future still looks very promising. So despite the run-up, the investor, my advice to the investor would be to stay invested, and I think there is still plenty of more upside potential here.
Okay, Mr. Das, it's a consensus thumbs up on your investment in Visakha Industries. Thank you for calling us. Another caller joining us, NK Sinha. He has a question regarding Aarti Industries. Mr. Sinha, what exactly is the buying price and how many shares do you own?
Actually, today bonus has been allotted. So actually, my buy price is 900 rupees. I have got 300 today bonus. So I have total 300 shares of Aarti Industry at the rate of 850. I am a long-term investor.
Okay, exactly.
What should I do?
Okay. We'll try to help you. Kunal, come in on Aarti Industries right now, trading at 810 levels. And our caller here has invested at 900 price point. This one has also seen a decent up move from its August lows. At least at this juncture is looking fairly okay, but it hasn't been able to recover those 1400 odd levels. Can you tell us what exactly should he do?
The long-term charts are extremely strong, Karanya, for Aarti Industries. So I think if the investor is holding on to it from a longer-term view, I don't see any reason why you should look out to book your profits early. I think at best, when you generally try and look out for such stocks, long-term stories, long-term uptrends, you try and use corrections of the magnitude of almost 20% or 25%, as good levels to try and average out your holdings further. So I believe Aarti Industries could be in that camp, and maybe the stock comes back to those key support levels, bonus adjusted price of 750, 720, I think look to average further and bring your cost price much lower for Aarti Industries.
Ashish, are the fundamentals also as strong as the long-term charts?
Certainly they are. I think they're one of the good pharma players, and Aarti Industries has been doing very well, consistently doing very well over the last many years. So I do not see any change in its performance going forward. When you have a winner, I think it doesn't matter if it has come down a little bit in the near term. I think if you have more money available, you can use this downturn to add more to your portfolio. And I really think that as long as you're a long-term player, you should make money here.
Okay, Mr. Sinha, there you have it. Both of our experts have given it a consensus thumbs up on Aarti Industries. Thank you so much for calling in once again. And Kunal and Ashish, as always, pleasure chatting with both of you. Thank you for joining us on Buy Now, Sell Now.